Hi, I'm Kevin McFarland. Let's take a quick look at what happened in the U.S. Treasury market in September based on data in Greenwich Marketview. On the long list of things that remain uncertain in the world, U.S. interest rates are not one of them. So despite the fact that market volumes did tick up slightly in September from the summer slowdown, U.S. Treasury trading activity still remains low relative to the same period last year. The same holds true for volatility. While the MOVE index, which you can see charted here, has risen as the U.S. presidential election gets closer, its average in September was still nearly half of what it was in 2019. The biggest market structure shift post-COVID has been a decline in central limit order book volumes relative to the overall market, which is the blue color at the bottom of this chart. CLOB activity accounted for 33% of the market in September 2019. In September 2020, CLOB volume made up only 26% of the market. Measured by the absolute change in volumes between those same periods, CLOB volume is down 40% year over year. Trading between the buy side and bond dealers, however, has steadily risen since March, from 16% of volume then to 29% of volume now. A number of factors are responsible for both of these shifts. Fed policy, futures market activity, and the global economic impact of the pandemic are certainly on the list. It remains unclear if this is a structural change, but one that will slowly revert back to normal once the election and pandemic are behind us. It is worth restating that central limit order book markets are where benchmark prices are set for the most liquid set of instruments in the world, and they will and should remain an important part of the market structure going forward. On that note, derivative markets are also quieter than they usually are. U.S. Treasury futures volumes remain down both compared to the same month last year and relative to cash market volumes. Interest rate swap volumes have grown every month since bottoming out in July, although also remain below the same period in 2019. Lastly, it is also worth noting that SOFR futures volume has been on the rise since hitting lows in March, and open interest picked up in September for the first time since the pandemic began. Eurodollar futures, however, moved in the opposite direction, with both volumes and open interest trending downward. Thanks for listening. We'll be back after the election.